Hello everybody, welcome back to Financial Trading Basics Part 17, Commodity and Currency. A lot of good topics to cover today. We'll start with some definitions, we'll talk about some economic topics, and then we'll talk about how to trade them, and I'll give you some updates on my trades. The first thing I want to establish, again in the last episode we talked a little bit about the difference between currency and commodity, but just some solidified economic definitions. The first thing I want to say is inflation is not any sort of stimulus, any sort of general money printing, or any sort of even buying capacity from 10, 30, 40 years ago. Inflation is when currency is no longer functioning as a currency. Right, in Venezuela, if you have to have a wheelbarrow full of literal cash to go buy a pound of chicken, you've defeated the purpose of currency. And more in a more broad sense, it's runaway. You know, it's a $1 trillion stimulus isn't going to make the dollar devalued. Whatever that cause of the devaluation against, again, the global currency environment, that is what inflation is. In casual conversation on CNBC, it doesn't throw me logically, but that economically, that is what inflation is. Currency is a medium of exchange for goods or services. Commodities are physical goods, imports or exports. Volatility is just rapid change, and that can be any given market, that can be sentiment, it can be a given security, a given trade. Solvency, we've defined as the ability to amortize, and that's pretty specific. I'm just giving definitions. I took some notes past couple of days, just words that popped out at me. With solvency, the ability to amortize is specific to a given company or a given market. Right, you can have the stock market, right, I'd say solvency is specific to a given company. Liquidity is specific to a given industry, given market, trading environment. And liquidity is buying and selling activity of a market, right? There's liquidity at the farmer's market if everyone's trading their corn for chickens, and you have some chickens, you can go trade, get rid of the chicken. If you're in a stock position, if there's a lot of volume trade, you can get out of your position, probably tight spread. So those are the terms I wanted to cover, and I definitely wanted to emphasize that inflation is runaway or extreme price, extreme depreciation of a given currency amongst other currencies. Because right, the physical goods aren't changing that much. And now, how about consolidation of supply chains? Consolidation of, well, we'll just get to the topics. Let's just start with, we'll start with this. Where does currency come from? What is the motivation of a currency over 1,000 years, 500 years? Is it industry or is it consumer? It's efficiency, right? It's efficient, but then I have, where do businesses come from, right? I think a business comes from, it's more efficient for a given group organization because of skill sets. Okay, how do skill sets affect labor markets? Right, because not everyone can be a doctor, not everyone can be a lawyer, not everyone can do this or that. So businesses come from inefficiency or distribution of skill sets within the labor market. Where does currency come from? I have a less convincing answer. I just think it's, well, I would say it's efficiency of logistics, efficiency of supply chains. Namely, right, if I had to ship a bunch of goods all over the place, as opposed to, you know, giving someone $1 for it or like bartering, that would come from. I don't really know how that relates to, again, the motivation of where businesses come from. Businesses, like, definitely the discrepancy of skill sets within the populace. Those are kind of like the overarching topics I wanted to talk about. And now I want to say, how's the environment going to change over the medium to long term, right? In 100 years, the shores of the United States aren't going to be that much different. Over 100 million years, the environment's not going to stop changing. So latitudes and longitudes are going to change. imports and exports given to a specific country or state or province is going to change for sure. It's not going to stop changing amongst the medium and long term. So I think this will give a great trading environment for the foreseeable future, for future contracts on commodities. I don't think I've said the word futures in this lecture series. But a future to me is a more broad, effectively a more broad option, right? A contractual ability to buy a given anything at a predetermined price. So because of the inefficiency of the environment, because of the inefficiency of logistics chains, right? We just saw evergreen get stuck. There should always be good cyclical trades. And another term, but cyclicity. In economics, people are talking about, I'm assuming seasonality, just companies that have stronger revenues during the winter if they're selling snow plows, or stronger reservations for leisure things in the summer, against like a moderately not saturated but matured market where they're not necessarily huge growth stocks, but they'll be value stocks. But overall, I really like, and I have not traded futures contracts in any meaningful way yet, but the inefficiency of logistics chains and the maturation of the labor market should be tremendously good for trading commodities and currencies. Let me make sure I'm still rolling. And one more topic I wanted to discuss before talking how to trade this, or just again general trading ideas. But I want to make the point that sentiment is not correlated to medium and long-term fundamentals. You might just say, well, Brad, what the fuck does that mean? This whole time you've been talking about fundamentals, and fundamentals coming before the price increases, blah, blah, blah. Well, the two examples I want to use are Peter Schiff and Bitcoin, and cannabis and people. Nothing even super specific, just Peter Schiff has been big, for the past 4 years. The shift in sentiment period for Bitcoin from 4 years ago till now, from 2013 till now, right? Now it's like, there might be a short-term correction in the near term. 4 years ago this thing is dead. This thing will never work, will never be a thing. And that's completely divorced, completely separated, completely uncorrelated from do we already live in a virtual currency environment? Does this technology produce substantially more efficient outcomes? Does it stabilize something? Does it have some sort of use case? So has that changed in Bitcoin at all? Like literally at all? Like the exchanges have gotten better, but the fundamentals of 21 million coins, decreasing introduction of supply of the Bitcoin, that has not changed at all. So, and that's even a more specific example than cannabis and people. Right? That's the past 5 years. Now how about 60 years or 70 years for cannabis and people? Has the biology of cannabis changed? No. Has the structure of the human cell changed? No. Sentiment has changed. And the fundamentals of biology certainly haven't fucking changed. So my general point is, tons of examples, but if you have a technology, if you have a company, if you have some product that addresses a true problem, everyone can say this is not going to fucking work at all. Even the people that buy in 2012 and sold in 2013, or bought in 2010 and sold in 2013, well, they're selling it because they don't see the long-term perspective either, again, for Bitcoin or for any sort of trade at all. So everyone at some point, well, not everyone, but you can have 99.9% sentiment against something. If it still solves a problem and it gets introduced to a populace, it's going to take root. And I guess I use I think the Schiff Bitcoin example is way less poignant than the cannabis people example, because just how relevant cannabis is, how many states have legalized, how people know it's good and healthy, but the sentiment of the species is just now to trading. So we said commodity currency correlations should be very strong and attractive for traders. Again, inefficient logistics, supply chains. We are certainly at a novel state of technological development. That will be very good for the long term. Managing Riot, Bitcoin, and Carnival Cruise as one trade. So and profit expectations and skill diversification. Talking about a traders individually. So this whiteboard cost me $300. This was a profit from a trade. I said I had a specific, clear, defined goal, and when I started trading, my portfolio certainly wasn't as developed as it is now. So I have a cash generating. The bar and restaurant I'm invested in should do 350 to 500,000 in revenue this year, just depending on the COVID stuff, and then hopefully double that to maybe 1.5 that in the next year, 18 months. So I have a cash flow generating business that should cover all my base bills. I have all of the equipment I have for my math videos, for everything in my office right here is small time trading profits, $100, $300, $1,000. So that was my goal, was to build my equipment for my YouTube channel. Well, now I have 200 YouTube videos. So I have my music portfolio, my cash generating thing, my patented company, a lot of math stuff. But so Bitcoin, I have a substantial position in Bitcoin, so if I start depreciating hundreds of thousands of dollars, managing the trade specifically for Bitcoin is going to come from the timing of the cycles. I'm in a profit range where even the lowest case I would have is still a substantial profit margin, and I don't have anything else to buy. Like I said, I've built out my portfolio in a way that the profit expectation I have is to pair to something specific, like buying a house, buying another business, buying a car. But the timing of specifically the Bitcoin trade will just come from the timing of the markets, and I wouldn't I wouldn't try to trade Bitcoin. Like I said, I have the buying power to buy Riot. Should Bitcoin dump 50%, well then I will load up on the Riot, and again, nothing has changed on the medium or long term perspectives specifically to Bitcoin. Now I have about 15 grand in Bitcoin, and I have about 25,000 in Carnival Cruise Line. Carnival Cruise Line to me is again just a reopening trade, traded between $40 and $70. The sentiment of the species will come back tremendously, So Carnival Cruise Line to me, like I said, $23,000, $25,000 in that. Substantially confident on both trades, and let's say Carnival Bitcoin dumps and Carnival Cruise Line increases 30-40%. So I will manage the profits on one trade against the development of the other one. Carnival Cruise Line, like I said, until the reopening, I think that will be sooner. There'll be a momentum trade for the reopening sooner than December of this year or January 2022. So I expect the Carnival Cruise Line trade to mature more than the Riot and the Bitcoin, and then I'll take whatever profits from there and continue to add or take a heavy day trade position on one of these things. But like I said, this is long-term perspectives, multiple different ways to play a given sentiment change or a given fundamental development over 4 to 6 to 8 to 10 months or 18 months, or frankly, now that I don't feel like I'm huffing a can of paint to try to scrounge up a grand on a short position, trading cyclicals for 30, 40 plus % over 18 months is very attractive to me on 100 grand, right? Like if you try to make an extra 30,000, 40,000 on a very easy trade, like putting $23,000 into Carnival Cruise Line, could it depreciate? Sure. I feel much less like a crack addict trading this, or just having my money on there and no stop losses, stuff like that. But like I said, all of these cyclical things, at the end of this year, I'll take a chunk of money, short-term trades, cyclical trades, 8 to 12 months, genuine investments, try to find a company that's going to go really big in 10 years, and then start managing it against those time frames. So your profit expectations profit expectations should come from a direct defined financial goal outside of the market. Additionally to that, skill diversification, 1 for portfolio building in general, and 2 for developing yourself. If you have any sort of inability to manage your emotions, because I check the stock market all the time, but I don't overtrade. I've never overtraded. I've never been I'm completely sensitive to the sentiment like everybody else. But I watched the market for 6 months before I made a trade, and I just said, how does the market work? And I've already been a pretty developed emotional person, so it's not like I'm going to fall for dumb shit. But for the average investor, I would definitely say skill diversification for your own personal emotional development for managing your emotions during a winning or a losing trade. And now one last thing, just a couple notes on home buying and tax rates. The only thing I really wanted to say about home buying is I've looked into a house, but I'd probably be a cash buyer, so I don't really want to do a mortgage at all. But my only thing I wanted to say about home buying and skill sets, right, if you were, I kind of want to be a little offensive here, if like the 30-year mortgage rate is 1.7 to or 2.5% or 3.5%, and you buy a $300,000 house, what the fuck's, I'm literally, because I didn't write any numbers down, but 2% of $300,000 is what, $6,000? So if you're like worried about 1 to 5% over 30 years, do something fucking better. Get a skill set, play one instrument, make a YouTube series about one thing, generate another $2 to $3,000 a month. It's not that hard. So forgetting trading, forgetting economics, from a citizen standpoint, be less of a lazy fuck standpoint, if you have any sort of basic skill set in our environment, digital environment, you will be able to make money. And I genuinely think it's like a negative to the overall economy if there's a lot of people out there genuinely concerned about $6 fucking grand over 30 goddamn years. Do better, people. And tax rates, obviously big in the news today. Overall, I'm not really anti-tax. Again, I have never filed substantial amount of taxes. I'll do an update video on taxes sometime in the next year after I get cash out all of my things. Like just right now, I'm not sure if capital gains tax stacks on income tax. I did graduated tax brackets. You pay the percentage of the money into that income level. Right? If you make, I just don't have the brackets up here, but I'll do that in a different video. But I just don't know that much about taxes. But like I said, overall, I'm not really 20 to 40% short term. I don't know if that was for all capital gains. The capital gains tax right now, short term is 20%, long term is, or short term is 36.8, long term is 20%. But frankly, if I was paid what I was rightfully owed and was functioning and being able to operate a business fine, I would have no, personally, I think 40% is fucking high, but I'm just not that against taxes. Because again, do more stuff, you can make more money. But I do think 40% is high, at least a high increase today. And I will, personally, I'm not going to pay taxes. I don't have human rights. I go to the store, I pay sales tax. I go to the FBI to say, enforce the United States law, Article 1, Section 8 today, and they say, no, we're going to have a definitive police response to you. So on a personal level, there is no chance I will be paying taxes, just because I don't have constitutional rights. But in general, I'm not anti-tax, even to a medium and long-term or a higher rate, as opposed to, right, do I want 4 more houses, or do I want Johnny to be able to buy food and not stab somebody else's kid more? And so from a societal citizen standpoint, zero problem against tax increases, because everyone wants a functioning economy. And again, using the bartering example, if everyone had houses, like, with an increased momentum building sentiment, with an increased momentum building economy, everyone gets richer. So, and that's already happening. Sentiment is already changing. So that's what I think there. And we'll just see what the rates come out to be. But I will not be paying taxes in the United States. Overall, not against tax rates, moderate to even high levels. We just need a functioning economy. So I thought there was a lot of good topics in this episode. Thanks for watching Financial Trading Basics Part 17, Commodity and Currency.